Hi, good evening, everyone. Welcome back to the channel. So, as we approach 2026, I am absolutely bullish on the market and different things that are going to happen, including, as you all saw in my last video, the return of QE, the end of QT, potential further rate cuts, new Fed chairman, and overall great macroeconomic policy, and an overall great environment for growth, specifically growth in the stock market. With that being said, AI will be the driver of growth. I think one of the biggest drivers for the next 10 years or so. So there's some big stocks that I'm focused on in the year 2026, including for the first one, we're going to cover is going to be CrowdStrike. Now, those of you that follow me closely know that I have a wheel strategy that I do. It's my own variation of the wheel strategy, and it includes selling cash secured puts on leveraged ETFs. So you're going to notice a lot of these stocks are very high in price. And so we're going to also look at the leveraged ETF counterpart. Welcome. We're getting a full house here. Welcome, Dividend Degenerates, Chafflin Full, and to all of you. Okay, so let's go look at the first one because I'm going to go over the stock and I'm going to show you each of these pretty much has a leveraged ETF counterpart. So if you're bullish on the market, you know the theory. The market, if it's going to go up, then most of your investments are going to go up. And then, what's the real risk of, 2x leverage? Okay, so the first one being CrowdStrike. So it's currently at 509.16. This one has been around quite a while. If you didn't get in 2019, you probably missed the boat. Even 2023, it was 100 or so, at the last downturn. 2022, 94.72. So it's been on an upswing. And this year, what I want to show you all is Granite Shares came out with a a leveraged ETF for CrowdStrike. Let me make sure I have the ticker correct. Let's see. So CrowdStrike, it's CRWL, which is the Granite share. So if you can't afford $509 a share, here is the next best option, which happens to be a 2x leveraged ETF. Now stick with me here because I'm going to go over a lot of strategy info here. So, not only can you buy the leveraged ETF if you're bullish on a company like CrowdStrike, but you can also sell cash secured puts on these to get assigned at a price of your choosing, which is what I do all the time. So with that being said, let's go back to CrowdStrike and let's look at, I'll tell you a little bit about it. We'll go over the Seeking Alpha ratings and so on and so forth. If you all watch a lot of YouTube videos, you all probably see a lot about CrowdStrike. So there's a ton of articles on here. We're not going to spend too much time going over them all because I'm going to go over about 7 stocks and I'll probably give you a bonus one as well. So let's look at Seeking Alpha analysis, press releases. Let's look at the financials first because one of the key metrics I like to look at is cash flow. So not all companies remain cash flow positive, but typically, in my book, once a company turns cash flow positive, it's golden. So, we won't, this isn't an accounting channel, so we won't bore you with accounting stuff, of course, but we like to see that companies are moving in the right direction. Some of the numbers look a little bit negative, like net income, things like that. I like to look at cash flow. I look at balance sheet a little bit, but I'm not going to waste too much time on the video on those type of metrics. So we look at net change in cash, and then we should be able to see leveraged free cash flow, levered and unlevered free cash flow, and then free cash flow per share, which as I see it, looks positive. Now what I like to do is I like to go by quarter. So obviously, I'm not going to read every company's bio and description to you all because these are all, AI related companies. Some of these are going to be energy companies and data center. And some of them are going to be, just strictly AI investing companies. Now, I like to go by quarter for the cash flow, just so you all see. And I like to encourage you all to do your own fact checking and stuff, but make sure companies are cash flow positive for one thing. Okay, so next we have, let's see here, free cash flow per share. This is by quarter. So you can see we are definitely trending upward in this in terms of free cash flow per share. We are trending massively upward in levered and unlevered free cash flow per share. Okay, so there's that. And I think what's dirt cheap right now is the Granite shares, CrowdStrike 2x long ETF. Now this one just went public last year, last November. So it's not even it's a little over a year old actually. So in 1 year, it's up 48%, which is pretty good. And if you've been doing the cash secured put strategy, which I also call coach's wheel strategy, you're doing very well. By the way, on another note, for those of you that follow my wheel strategy close, we got our tendies. I was going to call it our tendies, but we got our payment for um, our money market funds infidelity. So I'll go over that in a separate video. That is about 37.50 for the month, which is pretty solid. It's going up. So what I do when I hold cash secured puts, I earn money market rates on the cash secured puts. So instead of just owning a stock, there's like 4 or 5 different income streams you can have from wheeling one fund, essentially. So you're not even actually owning CrowdStrike, but you're making money off the leveraged ETF in this example. And then when you sell cash secured puts, which we'll get into all these in another video because I will be doing trades on all of these, but when you get into cash secured puts, the money that sits in cash doesn't just sit there, it earns interest as well. When you're doing funds like the SPACs or the FDRXX, you're earning basically money market or CD interest rates. I think it's down to 3.6% right now. So the rate is dropping, but it's on a bigger cash balance, which is encouraging. So with that being said, let's move on to our next company. So our next company is going to be Vertiv, Vertiv. Now this one is another, I believe, data center stock. We're going to have a few of these. So we'll just lump them all together. AI/energy/data center. So Vertiv is also pretty high, not as high as CrowdStrike, but it's up 58% for the year. And again, because these are all related in the same segment, same business, basically, I'm not going to go over the bios for each one, but you can all see this one's been massively profitable for quite a long time. I actually remember hearing about this company back in 2019, which would have been a great time to invest. It's possible it's done some splits and things like that. By the way, I'm signed in, so I'm able to see the maximum. I can see more signed in than I can not signed in. So with that being said, now the great news with these is that for the leveraged ETF slash wheel strategy, we have leveraged ETFs for all of these. So I'm going to move a little bit quicker. I'm going to go through the leveraged ETF counterpart for Vertiv, which is VRTL. So VRTL is also another Granite Shares one, 63.36 for the year. I believe we are up. It's not giving me a percentage, but this one actually just went public in March, so it's basically 3x. See, from 23.84, and it's pulled back from October. The real buying point was November 21st. Everything started to come back since November 21st, but that was the real buying point, I would say. So there's that. Let's look at, just for the statement analysis real quick, we'll go back to the underlying and cash flow. So cash flow, we're just going to look real quick at free cash flow, which I call the lifeblood of the company. Okay, so quarter by quarter, levered free cash flow and unlevered. So here between March and June, we took a little bit of a dip, but we came way back in September. This is why I've been saying AI and tech stocks have been massively oversold, because you can see the underlying metrics when you get past the headlines and start delving into the details. You can see they've been massively profitable. You can see with the change in net working capital here, which did decline from June, but was massively up since March. You can see a very solid trend slash wave building here with the levered and unlevered free cash flow and then free cash flow per share. So that is definitely, in my book, moving in the right direction. So that's Vertiv. That's company number 2. The next one is going to be Constellation Energy. So that's ticker symbol CEG. Now, pay close attention, folks, because some of this may seem boring, but these funds could make you massively wealthy in 2026, which, like I said, I think is going to be a great year. So we're going to breeze through these faster. And look at this. What could be cooler than analyzing AI stocks by using Analyze with AI? See this here? We can actually use generative AI to compose an up-to-date, easy-to-read company report. Why not try it? Let's see. So Constellation Energy, we'll do this for this one. And it pays a dividend. How about this? For dividend lovers, it pays a dividend. Market cap, EPS, it's growing solid. Constellation Energy, obviously, it's an energy company. Largest producer of reliable emissions-free energy in the U.S. Operates through 5 segments covering blah, blah, blah. Offers a diverse mix of energy products. And long story short, massively fuel AI. Now, it gives you, this is a pretty good AI report. I like what I see so far. And then, of course, for premium, you can do other stuff. Before we look at the leveraged ETF counterpart, because as promised, all of these have leveraged ETF counterparts. We're going to look just at the cash flow really quick, particularly free cash flow. Now, you can also look on your own time to see if they're doing buybacks or not. Buybacks, I would say they're not healthy, but they do help the share price of a stock. They do help to drive it up. So we can see both levered and unlevered free cash flows going in the right direction significantly. Working capital is also, see, it's a negative number, but it's less negative in Q3 than it was in Q2. Free cash flow per share is solid. So now with Constellation Energy, again, these stocks are really pricey unless you want to do fractional shares. Owning these stocks directly is never a bad idea, but if you want to juice your returns, owning the leverage ETF, especially if you're bullish on these, I think is a massively positive play. So this is up 62% year to date. It's up 42% over 1 year. And then it doesn't give the percentage for that one. But the levered ETF counterpart is going to be CEGX. Now, some of these that are big enough, they actually have 2. So there's about 3 companies that do these ETFs, mainly Granite shares. But the company that does this one is actually called Trader. So it's Trader 2X Long CEG Daily ETF. Feel free to sponsor me, Trader, if you'd like. And then the next couple of them are going to be more popular ones, but you're going to see there's leverage ETFs for those too. So CEGX, it's the same thing, whether it's Granite shares, whether it's Direction, whether it's Rec shares, whether it's Defiance, or whether it's, what did we say, Trader? The leverage ETFs pretty much do the same thing. So this one just debuted in July, so it's not even 6 months old. What's that? August, September, October, November. Not even 5 months old. Yeah, it's going to be 5 months old pretty soon. But it's 3071. You can see it peaked here in October, like everything else. Then it pulled back. So it's going to obviously mimic the stock, but it's going to do 2x to the upside or the downside. Now, if we have a recession, the leverage ETF strategy can be very risky, of course. What's this? Is this another yield max for future reverse split? No, not at all. We're pivoting away from yield max. As you know, I just showed that I dumped all of my yield max. I actually probably owe you all a video on that. I dumped all of my yield max yesterday, or yeah, yesterday was Friday, right? Yeah. So I dumped it all yesterday. And I'm focused on growth again, leveraged growth, the wheel strategy. And I think, yeah, let's all get rich the legit real way in 2026. So it's going to be a great year. Okay, so CEG and then CEGX is the leveraged counterpart. So we're up 62% in the stock. Let's do this real quick just to compare. I guess over 6 months, it's 18% over 6 months. But the leveraged ETF counterpart, oh, it's not going to give me a chart, is it? But you can see it's a little bit flat, but it was up to 39. But anyway, all of these I think are great candidates for doing cash secured puts. Now, the next companies that we're going to go over. So far we've covered CEG, Vertiv, CrowdStrike, and yeah, was it just those 3? Wait a second. CrowdStrike, Vertiv, and Constellation Energy, right? Okay, so we're going to breeze through a little bit faster. The others I'm not going to go over as much. The next one is Microsoft. So we'll go over Microsoft stock really quick. Microsoft is obviously playing in the AI space, just like NVIDIA, which is also going to be on this list. We won't spend too much time covering NVIDIA because we talk about NVIDIA a lot on this channel. So Microsoft, obviously, upside for AI. Now, Microsoft has 2 leverage ETF counterparts. So you all get the gist of the video. So we're going to breeze through a little bit faster. We've got MSFL by Granite Shares. And then there's another one we're going to go over as well. Some of these stocks that are so popular have a massive amount of leveraged ETFs. So you can see the Granite Shares one is up 22% per year. The other Microsoft one is MSFU. And if it doesn't go up, we'd tell it FU, right? So this is the direction one. So which one's cheaper? We've got 28. So the Granite Shares one is cheaper. But for an alternative, we have the direction one, which looks like isn't doing as well, actually. So it looks like the Granite Shares one is actually doing better. So that's Microsoft. And then for obvious reasons, NVIDIA is on this list. You all know NVIDIA. We don't need to cover that too much, but NVDL, this is my favorite. This is my number one wheel strategy ETF this year. I've actually made a fortune off of this one, and it's only up 21%. But to think earlier in the year, we were trading this below $50. At some points, we were trading below $30, and it hit as high as 113 in October. And obviously, I'm still massively bullish on NVIDIA. Okay, so next one on our list is Palantir. We'll just breeze through these because these are much better known. But obviously for Palantir, you know the ETF for that one. That's we do trades on that one, PTIR. I think PTIR is actually a better ticker symbol than Palantir itself. So you all can see Palantir's obviously had a phenomenal year. And so if we look at PTIR by Granite Shares, that's the one I trade. This one's up 195% for the year. So not exactly 2x, but still, because of the daily reset and all that, you don't have exactly 2x, but you still have a much better return. You see that? People that are like really textbook / academically focused people, they'll say, well, it's not actually a 2x because the 2x would be 250% almost. I don't care. Look at this, 123%, right? And then in its counterpart, its 2x counterpart, 195%. That's 70% higher. Guess what? I'll take the one that's 70% higher any day. Okay, so that's Palantir. The next one that's on my list, and there's going to be some bonus ones too, but the next one is Bloom Energy. This is one we've actually not talked about on this channel. So I'll spend a little bit of time going over this one. So Bloom Energy is up massively over the last year, almost 300%. How about this year to date, 400%? Wow, I wish we caught this like much earlier in the year. Now, the good news is, this is great news. This is actually such great news. This is the best news that you all have heard all day, possibly all week. And the news is so good because it entails the 2x leveraged ETF for Bloom Energy. So if you all are feeling FOMO for missing out of the upside here, you're going to be so happy to know that Bloom Energy's 2x leveraged ETF just went public November 13th. It just debuted. So check this out. It's called, oh, did we look at PTIR by the, yeah, we did. I'm sorry. I'm losing my mind here. Okay, so it is BEX as opposed to BET, which I know a lot of you watch. So BEX literally just went public November 13th. And I say public like a stock, but I mean it debuted. It started trading, basically. There's a little bit of nuanced difference, obviously, between ETF and stocks. Okay, so November 13th, it was 1586. It bottomed out at 1150, and it's up to 1668. So it's doing pretty well. And if you all are looking to get in with the wheel strategy and sell puts on this one, I'd probably target, 20, maybe even 25, because I'm massively bullish on this. So let's go over the underlying here. I want to spend a little time since I'm introducing a new company to you all here. So let's see. The actual ticker for Bloom Energy is just BE. So let's look at the financials here because this one has run up quite a bit. So you all might ask, and it's a good question if you do, you might ask, does this still have significant upside? Well, let's look at some of the numbers real quick. Levered and unlevered free cash flow. What you're going to notice here, part of its breakout is that, and it's still in the breakout phase, I would say. So the cash flow has been inconsistent. It was negative here, and then it was massively negative. Then it turned positive. And then free cash flow per share just turned positive for the first time since December of last year. So there's some inconsistency here. But I want you to focus on couple things here. We'll look at earnings for one thing. So earnings was a slight beat by GAAP standards. It was a miss. Next earnings date is February 13th. And then here's some really good for bonus stuff. Here's some really good like Oklo. This is one I'm really bullish on too. Related stocks that people follow. So we can look at growth, profitability, revenue growth, all of this stuff. But what you'll see, it's run up here. Well, it was 142, so it pulled back. Your best buying point really was November 21st. Before then, you can see it ran up massively over the summer, where it went from $20 to where it is at almost 5x basically. So the others, there's a couple others on the list. We're gonna probably go over 7 because I've got some bonus ones. Amazon is my next one. You all know Amazon, so I'm gonna skip right to the leveraged ETF, AMZZ. This one is also by Granite Shares. So AMZZ has been a little bit, it's feeling, you're hearing the Z's from it because it's kind of been asleep. It's down 6% year to date, 3% for the year. Let's go over the underlying really quick. Obviously, we all know about Amazon. They pretty much, I feel like, run the world. Up 6% for the year. So flat, but I think Amazon's due for another run up very soon. Amazon, I believe, is a great long-term play. It's a great stock to hold in your portfolio for a long time. So free cash flow. You can see massive leverage and unleveraged free cash flow. In fact, that's one of the prettiest numbers I've seen for a stock. Okay, so, and then the last one, it's Tesla, which is Tesla has to be on this list, of course. So we've got TSLL. There's 2 leverage ETFs. TSLL, which I have active positions open in this one right now, of course. I have covered calls. I've already owned the shares. This one is actually down for the year, but if you look over 6 months, we've started to come up again. For the longest time, I was playing covered calls on these around 15 because it stayed here, but it broke out around here in September. So my covered calls are obviously in the money. They dipped below the money briefly, and we're in the last 30 days. So I'll either be able to buy them back or I'll just, get a sign and get the shares called away. Either way, I make a good chunk of money. So I'm happy about that. I'm always happy when that happens. All right, so TSLG is the other one. This is leveraged shares. This is a 4th company now, leveraged shares. So this one is down, actually. So this one doesn't seem like it's maybe managed as well. I think TSLL is the better one, actually. Well, actually, you know what? They're both down. I'm sorry. This one's down slightly less. But if you look over 6 months, 17.81% and then 16.4. Now let's look at the underlying because we know Elon Musk, one of our favorite people. He's very erratic. So because the stock has been so choppy and because you have a daily reset on these, the last 2 that I showed you are a classic example of how the daily reset can erode the value and how it's very hard to recover. So I covered quite a bit here. I'll leave you on one bonus of 2 that I'm actually bullish on recovering. I'll give you SMCI. This one has been very choppy. It's still up, believe it or not. It's up for the year, 11%. It went as high as $60 a share. 60 seems to be its support level. Once it hits 60, it kind of comes back down. And the resistance level, which it tested new lows, February 2685, it tested new lows. And obviously, its leveraged ETF counterparts are SMCX, which you hear me talk about quite a bit on here. This one's just now starting to come back. This one is down. This is the great example of how the daily reset works because you'll notice while the underlying is up, this is almost similar to NAV erosion. So while the underlying is up, this one, because it's such a choppy stock, the underlying is up, but the 2X counterpart is down 58% for the year because of the daily reset and the fact that it's so choppy. You have such high highs and such low lows. So that's something you got to look out for. In this case, it would actually be better to own the underlying. SMCL by Granite Shares is the other one. You all will notice this one. I just actually talked to them at a conference and they decided to do options on these too. So this one is dirt cheap. So that's going to be my last kind of bonus one for the year. So I'm massively bullish on these. What do you say here? I didn't see the YieldMax reverse split coming. Maybe I didn't want to see it. I didn't see it either. And like I said, Mike was on my channel twice in the last month before it even was announced. And they didn't break the news on my channel. But like I said, I'm done with YieldMax. I've dumped it all. Except for YMAG. I still do have YMAG. But anyway, these stocks I've shown you, I'm massively bullish on. So thank you all so much for tuning into these. I hope you all are able to get rich off of this. Give me a like if you liked what I said. If you liked what I was dishing out here, like, comment, and subscribe and join the Discord while you're live. Please smash the like button now. And we'll see you all in the next one. Take care. Hope you all had a great holiday, great Black Friday, so on and so forth. Scoop up those deals. They're still going, Black Friday weekend. And we'll see you all in the next one. Take care. Bye.